Hi, and welcome to another edition of Danny Brown Talks Phoenix. I am your host, Danny Brown, and this is our November market update. As always, I am joined by Garrett Cirkvenik of JFQ Lending, and Garrett's going to kind of review with us where the mortgage industry is at right now.
Yeah. So, we haven't seen a lot of movement in the market recently. Rates actually came down a little bit this month.
That's interesting.
Yeah, it is. Because we've been seeing them climb all year, and they were expected to climb, through 2019 and into 2020. So, it's been a nice little break from the rise. But when I say decline, the benchmark rate came down from 5% to 4.9. So, you're still in the same ballpark of where they were, but it is a nice little drop. And, I think it's going to level off into next year, especially through the holidays. We usually don't see a lot of movement in the market this time of year. One of the cool things that actually came up is that they just announced the Fannie Mae and Freddie Mac conventional loan limits that are actually going up this next year. The loan limit is basically, what you can borrow on a conventional loan before you get to, say, a jumbo program. Jumbo programs are a little more restrictive. You typically got to put more money down. So, it kind of limits the buyers that can do them because sometimes you need 15 or 20% down. So they bumped it from $453,000 up to $484,000. So it was really a big jump.
It is a lot.
And now you've got people that can buy into the 500s. And what it really does is, conventional programs allow for 5% or in some cases 3% down. And so now you can buy a bigger property, spend a little bit more, and still stay with those conventional guidelines, the conventional pricing, and
keep some of your cash.
Keep some of your cash instead of having to put more into it. High balance loan limits, which we don't deal with a lot out here in Arizona. Places like California and Florida, those went up from $679 to $726. So really, I think it's just going to, as home values continue to rise, conventional Fannie Mae and Freddie Mac are really trying to keep up with that and make sure that buyers are able to still purchase, with a conventional program. So that's starting January 1st. But there are a lot of lenders that we work with that have already rolled it out, and they say, okay, well, we can get started right now, and we'll give you a $484,000 loan, and allow you to put just that 5% down, and we'll close it after the 1st. So.
That's fantastic. That's really good news for the housing and lending market. Are the Fed, are they still intending on raising rates, do you think, this month?
The December rate hike was already priced into the market because it's anticipated a few months in advance. So, when they actually meet and do that, it doesn't really have an impact on rate because, when they announced they were thinking about doing that 2 months ago, that will cause the market to increase. They are expecting to, raise them a couple more times in 2019. Originally, the thought was 3 more increases, and now, they're starting to pull back a little bit. I think, the economy is, it's slowing a little bit. You're not seeing as many signs of growth as, you were at the beginning of this year.
Well, we actually saw on Monday the yield curve for the first time since I think it was 2008, actually inverted. It's super technical, and I won't get into all.
It's above my head too.
Yeah. So basically, what that means is that the long-term rates in which banks borrow money for each other, I believe, is lower than what the short-term rate is.
Yes.
And so more people start investing in the short-term rate rather than the long-term rate, and that potentially can push you into a recession.
Yes.
And from my understanding, it's happened 9 times over the course of history, and we are 9 for 9 when the yield curve inverts that we head into a recession.
Perfect.
What I found interesting is that it's not immediate. So in some instances it was 6 months, in others it was 2 years. And whether or not we go into a recession, I think, is how the Fed ultimately responds to this yield curve inverting. And I know that there's a lot of pressure from economists, and the economist that works for the National Association of Realtors is putting their lobbying power behind trying to push the Fed into not raising rates as aggressively as they have been.
Yeah. And that's obviously great for everybody in the mortgage industry. It's great for all of our clients and people buying and refinancing. Refinance has been a tough market, for the last few months as rates have gone up because there's not enough benefit there outside of, say, a cash out loan. So that'll be good to level it off a little bit, let people buy at these rates, and then be able to refinance down the road if they stay consistent, maybe if their credit improves and things like that, and still be able to get something better than what they have. I think the last thing I read was saying that, maybe it's down to 2 rate increases in 2019, and then even that's dwindling. I think we've still got some uncertainty with all these tariffs, with China as well, and that's having an impact on the market. So, there's a lot of uncertainty right now, and a lot of turmoil, and so I think as things pull back and slow down a little bit, we'll see rates just kind of slow.
That's kind of what I'm expecting as well. I think that when it comes to the housing market right now on a national level, 10th straight month in a row that pending sales have weakened on a national level. But what we're actually seeing is some communities are actually growing, and there's people who are starting to move from the more expensive coastal regions. So your Californias, your New Yorks, and they're moving more inland to markets like Phoenix that are more affordable.
Got it.
And Trulia just came out with a report that ranked Phoenix as the 7th most desirable city in the country for 2019.
Wow.
And they're basing that on 5 key metrics: job growth, vacancy rates, good starter home affordability. The average price point to purchase a home in Phoenix is about $260,000. So it's not terribly expensive. It's definitely up from this time last year. And then inbound versus outbound home searches, which Trulia obviously has in Zillow, is able to monitor who's searching from where. And population of first-time home buyers.
Okay.
So Phoenix is a very young city, young population. We have tons of snowbirds here and retirees, but we do have an aging millennial population that is starting to purchase homes. So that's ranking Phoenix as one of the 7th most popular markets for 2019. So I know that a lot of people from our last market update commented and thought, we are in a housing bubble and that prices are going to plummet sometime soon. And I still don't think that that's the case. I think that we are headed towards a balanced market for right now. The future is uncertain, so we could be headed towards a recession, and that absolutely could have an impact and probably would on housing. But that could be 6 months, 2 years. We just don't know exactly when that's going to happen. So,
in a balanced market, you're meaning that there's the market is equal for buyers and sellers.
Correct.
You're not okay.
Yep. And right now, every single region of Phoenix is still in a seller's market. It's definitely softening. The closest community that is in somewhat of a buyer's market would be Buckeye, which is way out west, and that just has to do with the number of listings and the affordability. So what I found really interesting is that while our inventory is up, it's not due to more listings on the market than normal. It's due to a softening in buyer demand, and I think that has to go hand in hand. There's probably a direct correlation with those increase in interest rates. So what a lot of people are speculating is that as we get more comfortable with a slightly higher interest rate, which we always do, that people will just return to purchasing property like they always have.
Got it.
So we're seeing this kind of slowdown right now. Part of it is seasonal. So this time of year with the holidays, people kind of forget about, shopping for a home or listing properties. We always see an uptick in the spring. So it'll be really interesting to see if that trend continues.
Okay.
Yeah. So just in terms of kind of where Phoenix is at right now, active listings on the market are 18,500. That's only up 0.8% for this time last year. So again, active listings were pretty much right where we should be. Monthly sales, we had sold 6,600 properties last month, where we sold 7,200 last year. So that's definitely down a bit and kind of shows that buyer demand is definitely softening. So because of that, we're seeing longer days on market for sellers. So I think sellers need to, be prepared for that this when they list their home.
What do you think the average is? I mean, as far as
average days on market?
Yeah.
Average days on market right now is 45.
Okay.
So that's definitely up. That's still super short.
That is, yeah.
But I'm expecting that we're probably going to see days on market continue to kind of increase, and it will probably get closer to like 90 days,
Okay.
120 days. But that is normal. It's not normal to list your house on a Thursday, have 5 offers, and be under contract by Monday.
By the weekend.
Yeah, that's just not sustainable.
Okay.
So the 90, 120 days on market is a little bit more normal.
Okay.
And we just haven't seen that in a very long time. So there's realtors in the industry who have never seen a balanced market. So it's going to be interesting to see how kind of the public and the professionals in the industry kind of all react to this information. So,
all right.
yeah, so it's going to be interesting to see. Hopefully we finish the year strong. Again, housing prices and sales prices, when you look at a graph on where they're at versus the rate of inflation, they're right where they should be. So
Okay.
those two lines are intersecting. I think that we're going to finish the year, right at that level. And that indicates that, everything is kind of equal and balanced. And I think it's going to continue that way as long as, unemployment stays low. We're finally starting to see wages increase. They're not going up fast, but we are starting to see wages increase. So those are all really positive indicators. And just remember that, real estate is local. So a lot of times when you're reading articles and seeing the pundits on television, that they're talking on a national level, and it's also clickbait. So it's important to make sure that what you're listening to or what you're reading is applicable to you and applies to the region that you're in, because real estate is always super local, and what's happening on a national level is not necessarily what's happening here.
Got it.
So,
all right.
Great. I hope that you guys liked our market update. If you have any questions or feedback, definitely let us know. We will see you next month. Next month, I'm actually really excited for our podcast, because we are going to do a 2019 bold predictions. So we are going to speculate on what is going to happen for the year in 2019. So be excited for that. All right. Well, thanks for watching, and we will see you next month.